as we realized insurance was not only something that's complementary to this larger goal of helping small businesses, but the baseline seemed to be pretty low in their adoption of data and cutting edge machine learning technology. So in insurance, you put a different lens on it, and it's trying to figure out, okay, based on the data that we're collecting from an application, the data that we're collecting digitally through these proprietary resources, what's the probability of a claim? Yeah, there's structural inefficiency here that we're happy to tackle because we see the end goal of, this is a $20 billion industry in management liability alone, and I think it can grow substantially by putting a better product. This is Tanner Hackett, CEO of Counterpart, and this is the future of insurance.
This episode is brought to you by Pinpoint Predictive, who provides P&C insurance unmatched risk selection at the beginning of the customer journey. Pinpoint has revealed hundreds of millions of dollars in value for top 10 insurers by quantifying unpriceable risk like loss cost and litigation and fraud propensity earlier and more accurately. Pinpoint provides the largest and fastest improvements to loss ratios, less than 30 days to develop immediate deployable custom risk scores. To learn how a growing number of insurers are partnering with Pinpoint to improve their loss ratios, visit pinpoint.ai.
Tanner, it's great to sit down with you. I told you this before, but I've secretly been trying to get you on the show for a little bit. So it was great that your side reached out as well. Obviously, we've got some folks in common. So I've been watching from the stealth mode days to where you guys are at right now. But it's great to sit down with you and share the Counterpart story a bit with everyone. So thank you.
Yeah, really excited to be here, Bryan.
Can you tell us like your background and then where did the idea for Counterpart come from and what is it exactly? But let's get into who you are before any of that.
Yeah. As you hinted out at work with some really smart people from insurance, which is important because I'm not from insurance. I guess I'm an entrepreneur by trade. I've started a few companies, a large e-commerce company in Southeast Asia that was bought by Alibaba, started another marketing company, a marketing tech company in New York, scaled that business. And now I find myself in insurance, which there's this great Will Ferrell skit. I don't know if you've seen it, on when he receives the Lifetime Achievement Award in comedy. And he says, well, this is a long lifetime dream to be in insurance, and but that didn't work out. So I landed here, and he's receiving this massive award. And I feel like insurance is one of those things that's not well understood. I in fact, from a tech entrepreneurial background, I purchased the product, but I didn't know what I was getting. And so with us, the evolution actually started in HR tech. So Counterpart was envisioned to be this business that supported small businesses, those that were trying to figure out this thread between culture, compliance, governance, and business operations, and building a company where they can attract great talent, retain great talent, and then ultimately, build a successful organization by equipping their team with the skills, the resources, the transparency. So you can think about, this was 2018. There was all this new technology coming out. There was Lattice, there was Culture Amp, there was learning development software, and so we cobbled this together. We started to talk to investors and entrepreneurs and bring them wireframes, and the response was basically, yeah, cool, I'll get to that next quarter. And when you hear that as an entrepreneur, you're immediately like, red flags. Okay, something's on it. We haven't figured out product market fit. And continued to go down this thread, speaking to entrepreneurs and hearing about the fact that this seems hard. It's a commitment of resources when you talk about culture. It's something that they can't see the ROI for, is when you invest in your team and in education. And then meanwhile, starting a few separate threads with some folks in the insurance space, and very fortunate to get to know the founders of a few other insurtechs that were approaching it from a unique angle, which is, well, how do we actually address those sources of claims as opposed to, just wait for a claim to happen?
Yeah.
And the light bulbs went off. There's this product that exists in management liability that addresses, this is negligence, misrepresentations. This is harassment, discrimination, wrongful termination. These are the things, these are the exposures that come when a business doesn't have that strong culture, the business operations, the compliance, the building blocks of a great organization. So, at that point, we pivoted into this insurance realm, which, my education was pretty raw. Reading a book called Basic Rate Making, a 400-page book, which was an absolute snoozer. But you got to know the product. You got to know what you're getting into before you can really make that commitment. And then aligning myself with folks like Evan Rosenberg, who is the former chief product officer of Management Liability over at Chubb, and Mike Levins, who it sounds like you had an opportunity to work with before. A legend in the management liability space.
Yeah, and a great guy too, so it doesn't hurt. It's interesting that that gap in the ROI story or the cost benefit story led you to you were focusing on what the cost was, where the benefit would come from, and actually realize there's a solution there. I was wondering if it was more like people don't invest in HR, it's always a next quarter kind of thing, but it was even more fundamental than that. It's not just they don't invest in it, it's why they don't. It's hard to sort of size the impact of or the benefit of that investment other than, well, we have to, so we don't have a choice. We got to pay our people or got to give them benefits or something like that, versus the soft stuff, which I agree, there's so much value that comes from that, including the source of all of these kind of bad behaviors that lead to employment practices lawsuits, D&O lawsuit, all the things that generate claims in the management liability side. They're all really about culture and values and how human people are being or not.
Yeah, really, really well said. And it's not that they don't recognize the value, because there's a ton of research going on today that's been proven out around the importance of this to building sustainable organizations, both in a public and private level. However, a lot of these small businesses essentially have a gun to their head. It's perform today or you don't get a chance at the future. So when you're going through the prioritization of, to your point, can I pay my people versus just can I provide a great environment for them to learn? You're going to be all right, I'm focusing on how I pay. I'm focusing on revenue. I'm focusing on, my margins as opposed to, that longer term investment.
Yeah. Tanner, there's so much focus lately on insurance can't just be risk transfer. It has to be risk mitigation with transfer of whatever the residual risk is. But it feels like that's where you landed on, is that we need to rethink what being your risk partner means in this. And it's not just buying it from you and dealing with it after the fact. It's how do we engage in that up front? Did you always see the risk transfer side of it? Or were you originally okay, we honed in on the sources of these things, let's just focus on that and we'll find someone else to do the insurance? Or did you see it as kind of a holistic answer right off the bat?
I love it, because I almost caught you say your counterpart.
I'm thinking there's someone by your side who's walking you through this, working with you.
It's almost like your counterpart.
Yeah.
Yeah. So Counterpart, as we dug into insurance, we realized that there's this massive opportunity for us to re-platform the system. And when I think about insurance, it is a true system.
Yeah.
There are so many different pieces to it, which I think insurtechs have really focused on distribution, trying to solve distribution. How do we make it more efficient for people to get our product? Yeah. Actually, in learning about this space, there was a fundamental breakdown between actually the product and its design and its delivery and the value contribution to the end consumer, which in our case is small businesses under 250 employees. So as we thought about how we could deliver the best value to these businesses in our mission to help them be the best version of ourselves, we realized we need to control that entire process of creating revising the insurance product itself, which entails underwriting. How do you get signal from all the noise about small businesses? Where do you look in a 21st century? What are the breadcrumbs for small businesses to determine, does this mean it's a higher exposure or not? Because traditionally you're getting a PDF application, right? Yeah. I don't know how anybody quotes off that anymore. Yeah. you do a quick Google query and you're going to find some incredible stuff about
Right.
the business that you're insuring. Stuff that, you can try and ask every permutation of question possible to identify this, but the internet is a very powerful thing, and especially when you know how to look through API partnerships as well. So that was the focus of ours, as we realized insurance was not only something that's complementary to this larger goal of helping small businesses, but yeah, the baseline seemed to be pretty low in their adoption of data and cutting edge machine learning technology. So, this is where my background really fits in. While I don't have an insurance background, all the businesses I created were the foundation was in data infrastructure. One was an API business, which is the marketing tech company. One was an e-commerce business, and both of these are trying to predict consumer behavior. You're using past data, like kind modeling, to figure out what's the probability of them purchasing certain goods. In insurance, you put a different lens on it, and it's trying to figure out, okay, based on the data that we're collecting from an application, the data that we're collecting digitally through these proprietary resources, what's the probability of a claim? And so the modeling techniques are very similar. There's nuances for sure with actuarial analysis and the regulatory authorities, which we can talk about at length of why this insurance industry has yet to evolve versus most other financial services industries are really moving forward. But yeah, there's structural inefficiency here that we're happy to tackle, because we see the end goal of this is a $20 billion industry in management liability alone, and I think it can grow substantially by putting a better product forward.
Yeah. I think it's really interesting to focus in on the product. Like, you can fix everything around the product, but if the core product is still not really fit for purpose and doesn't contemplate all of like this universe of things that you built around it, then it's never really going to fully deliver on the vision that you have. And I have this conversation with a number of founders who either get that or don't. And you can see the ones who don't, like, they're just trying to like shoehorn it in over and over again and never really getting to what their vision is, because ultimately the thing in the center is not working right for what they're trying to do. So it's a big thing to tackle. And I always think like it's probably engineers who look at that and they're like, we have to fix the core thing, whereas everyone else be like, that's too scary, just go figure out something else.
Yeah.
I get
And
non-insurance background playing out here.
yeah, the non-insurance background, gives me this lens to start to ask the questions, right? But this industry has been around a lot longer than I have, and so it has meant pairing with some really exceptional folks. So Mike Levins on the insurance side, we have an incredible underwriting team of 95 years plus. We have a data team led by Tobias Schuler, who's an actuary by trade, but also has the full suite of data tools. We just hired Claudette Kellner, a really respected individual in the management liability space, and then Eric Marler on the claims side. So it's putting the pieces together to help support me, and it's with folks that they're tired of the old ways. Everybody's realized there's a better way of doing this, even major carriers, and that's why these program groups exist. It's because they're the massive ships. They have their way of doing things while realizing the future is coming, and it's coming fast. And that while very intelligent people at these carriers, like everybody realizes kind of what needs to be done, it is putting together the pieces, and they're not designed to take risk the way that a small startup is. So partnering with them, speaking directly to, we have 2 A-rated carriers that we work with, Markel being the first one. They bet on us early in the middle of COVID, a lot of disruption in the management liability space. Nobody knew what claims are going to happen. They said, hey, we think you guys have this unique tool that can help cut through the noise and build a substantial book. And that's just what we did. And so they're continuing to double down on our partnership. And then more recently launching with Aspen, again, a lot of experience in the space, and saying, hey, small business is hard. It's very inefficient to deliver a product to these small businesses. We know that with your infrastructure around data, with you understanding the UI, the workflows, and collaborating with brokers, you can deliver a product more efficiently and with better loss ratios than us doing it ourselves, even with the margins we save, from involving you guys.
So what are, if, I mean, to the extent you can talk about it, but on the data side and on the sort of risk mitigation or engagement side, what is it that you're doing that's different? So what are some of the key things you're looking at and how you're looking at them from the data side? And then action wise, what are you doing to mitigate the exposures or to try to control the outcomes before it's too late?
Yeah. So this is the core of our system. And 2 years ago, I'm not going to lie, when we had this idea, it was pretty theoretical. You're coming at this problem, you don't have a book of business which you've written and are able to back test. But we're coming at this from the approach of, hey, if looking at our exposures, and they're like, these are very broad coverages in management liability, very broad coverages. Looking at our exposures, what are the things that actually matter? And what matters is, what's your relationship with your employees? What's your relationship with your customers, with your vendors? What's your financial condition of a business? And I don't know, the last time you looked at a management liability application, they kind of get there. They get there in shades, but they haven't figured out, how to connect the dots between the actual exposure they've identified and an if-then statement to change the coverage in the terms.
Yeah.
And so this is something we spent tens of thousands of hours of engineering and data time and business time to try and isolate what was important, and then backing into that if-then logic to help us underwrite in a more automated fashion. Because again, this is small business insurance. I mean, we're talking about premiums $2,000 to $5,000, maybe $10,000. This is not efficient for a traditional carrier to write. If it's gonna require them to read through an application and get into their Excel and change, numbers, they've already lost money.
Yeah, totally.
So the data allows us to underwrite more efficiently, but we're pairing that data in a lot of cases when we identify exposures with the intuition of an underwriting team with 95 years. So this is something that's novel in that everybody thinks, oh, you just build a model and turn it on and right off in the sunset. That's not the case. It requires constant monitoring, constant iteration by the team to understand, is the theory around what's important actually playing out with claims? And now we have claims, which is great. Like, we're an insurance company, we should have claims, but our loss ratios are consistently best in class. And we're seeing that when we do identify a claim, we're going back into our system to retrain the model. So, we're getting smarter and smarter every day with the submissions that we're seeing.
Yeah. That's really critical. And I think a lot of people at a traditional carrier will say, well, yeah, we do that, but you do that annually.
Correct.
And so that, that's fine for all those accounts that don't renew until then, but what about all the business you're going to write in the interim? So more of a real-time feedback loop. That's materially different for sure.
That was one of the light bulb moments that I had when I would meet with the who's who of these insurance companies, and I would speak to them about our proposal and us trying to find capacity, and I would come in and tell my story about data and where I think the future of insurance is going, and they would pause and say, oh yeah, but we have 3 decades of insurance experience on our books. And I was like, okay, cool. Where do you get that? Like, where does it sit? Like, what's your data modeling, and how does this work? And everybody would look around the room and be like, yeah, I don't have an answer. I'm like, well, then, like, just how's it being used? Like, how are you actually using the data? It's one thing to have data. It's a completely other thing to know how to use the data and to apply it in almost real time. And to your point, like, yeah, they refresh the data every year. We do it every 30 minutes. 30 minutes, we're refreshing our entire data infrastructure.
Well, and yours is data. Most of theirs is probably information, which is like, it's PDFs, it's emails, it's whatever attached to a risk record or a claim record. Someone has to go in and get that. Or, if you have really good OCR and natural language processing, maybe you can extract it. But there's something you said that I think people should pause on for a second. When you talk about your claims experience, so you're small business focused. When I talk to folks on the cyber insurtech startup side, there's a lot of touting like, oh, our frequency is 2/3 lower than the industry. And that's fantastic. But if you control the industry for account size, when you just look at the small business that those startups tend to write, you get to the same frequency. So it's more market segmentation tends to drive their results. I know from experience, management liability, it's the opposite. Generally, the small business segment has more frequency than the larger stuff. The larger stuff can have more severity, but frequency, each one of those accounts, each one of those claims you're opening, it's expensive to open a management liability claim because you got attorneys getting involved. So it's like, I mean, depends how efficient you are, but I was at a carrier, it was $3,500 every time we opened a claim, and our average policy was $3,800, less 20% for our commission. So it's like, we're already underwater the second we even just get notice of a claim. But small business generally runs worse from a frequency standpoint, and yet you're having better experience. How? Is it just the underwriting, or are you doing other stuff? Because I get the underwriting story. Is there more to it, though, that you're actually intervening in the way the account experiences, they're going about their business and interacting with their employees?
Yeah, this is talking about your counterpart. This is a big part of our strategy. And some of it's self-selection.
Mhm.
Frankly, when a small business sees, hey, this is a carrier that actually cares about me and is doing stuff to be proactive, that's somebody we definitely want to insure. And they
Sure.
take advantage of our services. So, this is services around building a handbook. This is services around employee training. This is services around compliance, which let's just take a minute to talk about what small businesses are dealing with today. Like, we went through COVID. Disaster, absolute disaster. You needed to change the entire operating model of a business to, work remotely. Your supply, and now you come out of COVID and you're checking, making sure you're alive, and then you get punched in the face by inflation and again supply challenges, and you can't even find labor these days. So, yeah, like the fact that these carriers, which have all this data and could be helping these small businesses by knowing how to manage around the Family Medical Leave Act. What's the PSA you need to send your team? They're sitting on their hands. And so this was an opportunity for us to be that carrier that really stood out there and tried to push engagement with our insureds to try and make sure that they were aware of these benefits and actually promote them and drive their adoption. So definitely that's a part of it. But I think then, claims are going to happen in insurance.
Yep.
And I think that a similar lens around underwriting needs to be applied to claims management because the data is out there, right? The data around jurisdictions, around attorneys, around, around who's the plaintiff, and you're able to drill into what's the best outcome where all stakeholders are happy. And this means paying out claims, don't get me wrong, but there's an outcome that's optimal for the actual plaintiff, which it may be divergent from the optimal outcome from the plaintiff's attorney. Right. And so it's really thinking about this judicial system and making sure that both the customer, the purchaser, the small business owner, that they just want to create the best pie and not be bothered by a claim that they didn't understand wage and hour in a certain jurisdiction. This goes away, and that the person that was offended by the claim, they feel happy, and they're satisfied with the payout. So I don't want to dismiss that. Like, it starts with a frequency and severity from an education standpoint, but it really ends with how are you managing that sticky stuff that inevitably comes up with a small business and their employees.
Yeah, I think that's really well said. And it feels like so much more of an engaged interaction through the life cycle of a claim, which I've always been left wanting for that, because I think the level to which we can engage and actually talk through things with our insured or the claimant, and to the extent we're allowed to, as people, we can navigate things so much differently and figure out what really matters. And it's not to get out of paying or to just deny the claim. I think that the industry gets a bad rap for that. I think genuinely, we do try to take the claims. It's about paying the right amount as quickly as possible, not underpaying it.
Correct.
Just to close it out. But it's a breath of fresh air. I have to say, like, it's just a different engagement. I think There's a lot of, if hopefully there are a lot of claims people listening and they're like, oh yeah, that's why I got into this industry in the first place. And it's sort of been perverted from that over time. But like, that's the real reason we're doing this and the way we want to be doing it.
It's so funny you mentioned that. Recruiting in insurance is fascinating because, you look at people's backgrounds and they've been at different insurance carriers, and they've seen the way things done, but pretty much all done the same. Like there's little differentiation from, a large carrier standpoint, maybe some guidelines and appetites and, a few systems, but a lot of it's outsourced. Let's be honest. A lot of claim service systems are outsourced. A lot of underwriting systems are outsourced. So, the building blocks of how they're getting there, it's fairly normalized. And then the people jump ship all the time too. So you're having this reversion to the mean of these insurance companies, and we're coming in and saying, yeah, we've built our own underwriting system. We're building our own claim system. We're building our own insured services system from first principles basis with people that, yeah, it's like, you see them light up when like, no, this is possible. That thing that you dreamed of, when you went into insurance, it is possible. You just need the right ecosystem to encourage it. You need the right, engineering support. You need the right product support. And then, we've been very fortunate to have those partnerships with Markel and Aspen, and from an equity standpoint, raised a significant amount from some very prominent investors who they've been dealing with this from their portfolio, portfolio companies unable to get insurance, and then trying to figure out why it's 3 times more than it was last year. But the insurance carrier can't actually explain what the change in exposures is. It is what it is. So yeah, there's a lot of work to be done here, and it's just trying to figure out which battle to go fight first, and then how do we wedge ourselves into a point where it almost becomes an inevitability.
Yeah. Tanner, what you've shared some of the highs and the support and the positives that have come. What are some of the struggles you faced, or the difficulties or surprises that, like, what, that was really hard, or, we tried this, it didn't work, we learned a lesson. Some of the things that have been tougher to get through and more lesson, teaching lessons.
Yeah, I guess from a personal standpoint, it's been humbling to realize that the best product doesn't necessarily always win in insurance.
Yeah.
We spoke about the inefficiencies and by almost design, and if I was to work with the best engineers in the world and the best data scientists in the world and put together a product in insurance, I don't think it would be successful, because it is very much around relationships, one. And so, we have Mike Levins, we have Satwick, we have Brad, folks that have been in this industry for a very long time and are very well respected. We work with the largest brokerages of the world, folks that are really trusted, because when an insurance policy lands, or even a quote, or a policy specimen lands on the desk of a small business, they don't have time to read a 40-page document, right? Like, they're not going to understand the nuances between the coverages. They're going to see a price, and they're going to see management liability policy,
Right.
directors and officers, employment practices, fiduciary, etc. So it is an industry that I think requires a careful consideration for the way things have been done, and how we can support. In our case, we work through brokers, how we can support them to be more successful, and in them being successful, we are successful. So how do we make their workflows more efficient? How do we give information to them without them having to ask for it? Because they're stretched. I mean, being a broker these days is not easy. You're dealing with a cyber market that's in complete chaos. You're dealing with budgets that are really stretched. So they can't win. It just came off of an extremely hard market where it was tough to place any business. And the cycles are getting shorter and shorter. So I think it's incumbent upon us to not just build a great product, but then also work with our marketing team, with our insurance team, with our business development team to craft the messaging around the product in a way that is relevant both to brokers and to small businesses, and make it easier for them to procure this insurance product and understand the benefits of it, because nobody really has a great relationship with their carrier, right? There isn't a small, I can't think of a single entrepreneur that's like, oh, I love my insurance carrier, right? Like who says that? So I think that you're already starting from a place where it's a pretty low baseline. So how do we change that narrative, and how do we become more supportive? And it's not just through product.
Yeah. Well, it's funny. It's like there's no engagement if there's no claim. And if there's a claim, then it's a really binary split. They either
Correct.
love them or they hate them.
That's exactly right.
Yeah.
It's a tax. Otherwise, it's a tax, right? You're just like, all right, I'll pay it again.
Yeah.
Nobody works with their carrier throughout the policy term. Nobody thinks about them until a claim occurs. And then It's like, yeah, you're in the best case, you're like, okay, cool, you did what you were supposed to do. Worst case, they're like, yeah, they're all dead to me.
Yeah, and even if they're amazing on the claim, you still got accused of sexual harassment or defrauding investors or whatever it was. Like, even if everything works out well in the end for you, like, it's a horrible, like, you're not sleeping, you're not eating, like, it's a terrible.
Correct.
So tough space to be a hero in. Looking forward, and maybe on a more positive note than all these terrible things people would feel when they're getting sued, where do you see things headed for the management liability space? Like, do you think product will ever matter above all else? Do you think there's other things changing? What do you think, as we look ahead, like, given that you're in this position of trying to bring change, what do you think that change is?
So today, if you look at overall procurement of management liability, this is almost a luxury line, right? It's like when there isn't a law that requires you to purchase directors and officers insurance, unlike general liability, something like that. And it's actually a pretty small percentage of small businesses purchase this insurance because it isn't well understood what it does. It's fairly expensive, right? And so I think naturally, with the ability to better underwrite businesses, with the ability to better manage exposures before they come claims, circumstances before they come claims, and with the better management of claims itself, and rooting out some of those challenges with attorneys pressing along with outcomes that are suboptimal for the actual plaintiff.
Yeah.
We should be able to drive down the price of management liability. And as I see you being able to drive down the price of management liability, that means non-buyers can become buyers. And, with being able to better communicate that value proposition. So this will only happen in collaboration with brokers, where they're able to showcase these benefits to their clients, and with creating a better system around engaging with small businesses and showcasing how we can help them. But I think it is almost an inevitability, which then the TAM for this market grows. It's going to take a long time to get there. Don't get me wrong, but we come at it from this entrepreneurial perspective of, we're going to show these major carriers the way. Like, we're already outperforming them, right? And people are starting to pay attention. So it's an end goal for not only us to be successful, but to help move this industry forward for the benefit of these small businesses that I don't think are getting enough value for what they're actually purchasing.
Yeah, I think that's really well said. And I don't know why there would be non-insurance small business people listening right now. Maybe they just want to hear you, but if there are, they're like, yeah, it needs to be about what our needs are and the value we're getting. And it's almost like we've forgotten that. Just like, we forgot what claims should really be about. So maybe it took a non-insurance person coming in to remind us of those things. But Tanner, I really appreciate it. I think it's a great conversation. Great to hear about what you're building at Counterpart. And in an environment where some insurtechs have gotten some negative press about their performance or the fundraising strangle that a lot of folks are feeling right now, to hear about at the fundamental level folks who are taking it back to core principles of underwriting and getting that right, and the importance of claims, and seeing distribution not as something to squeeze, but as, another, sort of cog in the wheel of performing well. You've brought us back to the fundamentals of insurance, and performance-wise, it's proving out, which is great to see. So congratulations to you and the team, and wish you all the best of success. But thanks for joining us today.
Yeah, it's been fantastic being here, Bryan. Thanks for having me.
Thank you to Tanner for coming on the show and spending some time with me. I love geeking out about specialty lines. If you can't tell, it's always good to get back into what is, I guess you could call it, my home in terms of products. And management liability is not one that many people, if any, are really talking about. So much of the startup focus have been on cyber, on E&O, on GL, on BOP, and all that makes a ton of sense. But management liability is also really important, and it's a really tough nut to crack. It's hard on the distribution side. It's extremely hard on the underwriting side, and it's really hard on the claim side too. There are a number of things that make it just difficult across the board. And that also is part of why it's so necessary to have help, to have new ideas, to have new approaches, people trying to do better. And it's been great to watch what Counterpart's been doing. I hope that they're really successful, if for no other reason than for them painting the way for how the industry can do things. Because, as Tanner said, the more we can do better, get better results that can drive rates down, make this more accessible to more businesses, more protection out there, it's really important. So good luck to Counterpart. I'm excited to watch what happens with them. Thank you to all of you for tuning in and listening. I hope this stuff is interesting for you. Make sure that you're subscribed to the show so you never miss great interviews with founders, with executives, with thought leaders, like the one I got to do with Tanner today. Just subscribe on your favorite podcast platform, whether that's Apple Podcasts or Spotify or Stitcher or Pandora, or I don't know, anywhere else. And of course, if you're watching on YouTube, really easy, just hit the thumbs up button and then subscribe, and make sure you hit the bell for notifications so you never miss an episode. You always know when there's new stuff coming out. And I will be back, of course, with another great episode for all of you. Thank you to you for tuning in. Thank you to Tanner and the team at Counterpart for giving him up for a little bit. And thank you to Pinpoint Predictive for sponsoring this episode. And I will see you all next time. Thanks, everyone.